Tyler, good to see you.
Yeah,
How's it going, man?
yeah, it's going well. It's good. It's been busy, but it's going very, very well.
Cool.
Exciting things going on.
So you're in film finance as well. I mean, you're in filmmaking in general, but you have your eye fell on film finance and how to translate this into let's say into other financial industries. So I think that's very interesting. Also, I have some experience in that. So let's talk. Well, what are you working on for now?
Yeah, well, right now I work for a company called Tulpa Creatives. It's a Swedish company, and
Okay.
they're putting together a slate of 6 films to finance, which is obviously nothing uncommon. But in Sweden and a lot of the European markets, a lot of films are financed through the state programs, film funds, things like that, and very little is financed through equity. So we wanted to, in essence, find more films to finance and put them in a slate, but look at that slate as a financial vehicle that other investors and VCs are more used to. So, and not look at the normal film financing film investors. So our goal is to package it and align it with other financial vehicles, let's say like a tech startup or real estate, and design the slate for investors used to those types of markets and those kind of vehicles. And so from that, we had to kind of look at it from the ground up, because a lot of times, a lot of films, especially let's say outside of the EU, especially like in the US, a lot of times films are financed to get made. So right, like a producer's like their goal is to make a film. Where we're looking at it as, okay, our goal is to create an actual financial vehicle so investors make money. So when we look at it from that point of view, it's like, okay, how do we design this? So we're looking at it as a financial asset and not just with the goal of getting a movie made, but that movie actually making money. And there's nothing wrong with, the way that producers do that. I mean, you want to make a movie, but a lot of times financing is structured with that idea in mind. How do we, capital stack this to make the movie? That's usually the end game.
Right, because in general, when a producer asks for money, it's like, okay, so we need like $1 million or whatever. We're going to invest it in this movie. We're going to make this movie, and then the movie's going to be great, and we're all going to make money. But but where's the money going to come from? So the waterfall is important. The position, is it debt? Is it mezzanine? Is it equity? So those are all questions many producers don't think about. They think like, great, it's going to be great. But if it's not great, you just lose your money. So that's not a business model. So you want to put that into a business model which is understandable for the other financial industries. That makes it interesting. So that means basically you want to make it an asset class which is attractive towards other investors. So how do you want to make a very appealing asset class?
Okay, so what we looked at, we looked at like a normal way you would finance a film, and like a normal film, multiply it by 6 in a slate. Let's just see how that looks, and we kind of pressure tested that to see what investors saw when they looked at that kind of setup. So with that kind of setup, you're looking at there's a lot of, like you talk about, there's debt, mezzanine, etc. How does that debt get financed? You collateralize the pre-sales, collateralize the rebates, all those things. So we designed. So it was first designed just like, okay, let's look at the traditional model of film financing, and multiply by 6 for 6 films, and see how investors see that when they don't come from that territory. So for film investors, like, okay, yeah, I know this model, but for anyone else, what we saw was that it's way too complicated. We don't understand it. Why is it set up like this? And then in that waterfall, it's like, why do you have the exhibitors, and then you have distributors taking a large fee, then you have sales agents, and then you have debt, and then way down here, you have investors. And again, that model's fine if your goal is to just get a movie made. But since we don't want to look at it that way, we thought, okay, well, let's work our way backwards up that waterfall. What can we eliminate that looks more pleasing to investors who are just looking at it like an equity fund, as like a tech startup, as real estate, etc. So the number one thing is, okay, how do we get rid of debt? If there's no debt, what do we do? Okay, and the biggest thing is that, okay, well, if we use the rebates as rebates, and instead of using it as debt catalyzed, equity in a vehicle, well, then we can almost in a way guarantee a return, right?
That's true.
So, like the way, because if you think about it, let's just say, we'll just use like broad numbers here. You get a €5 million film, you're going to use 2 million towards to spend, rebate qualified spend, 30% of that, that's 600,000. So now you can say, okay, we're gonna actually give the rebates back to you. So now you can guarantee something. And a lot of times you can't really guarantee money at all. You know, it's a high risk, high reward, right? But it's high risk. And oftentimes you just say you could lose everything to an investor. Well, so how can we at least make a guarantee? Now, of course, they have to invest more money because you get rid of the debt. But now we can guarantee a return. But also on top of that, you know, when you are getting that pre-qualified tax rebate and you're using it to get debt, it's not a 1-to-1 ratio, right? You can't say I have a note of 600,000 and then you want to get 600,000 debt. You don't want to do that because you are having to pay interest on it, right? You have to pay the premiums monthly and then the interest on the back end. So you get
also sometimes interests are much cheaper with banks as well. So there's also a leverage element which is interesting, I think. But But still, though, so it's not like a 1-to-1 ratio. So the idea is like, okay, there's more money with the rebate that can be used in some kind of capacity.
Yes.
So that's, we don't have to dive into sort of all that nitty gritty, I guess, right now. But so the goal has been to look at, okay, what can we eliminate? And if we eliminate something, how do we justify that? And how does that benefit the investor? And because the more you can eliminate, especially for those investors who aren't used to this type of structure, it looks much cleaner. It's more simplified. They understand it. And there is, of course, risk, but now we are changing that risk.
Mm-hmm. Yeah. So basically, you're taking on the debt facility, you merge it with the equity. That's going to be one sum coming for the investor. So they're going to invest more. So you need to raise more money. But you can say, like, realistically, with pre-sales, you're gonna get like 60% back already on the debt side, or maybe 70%, and then the 30% will be, you know, still depending on sales and, let's say, on unsold territories, you know.
Yeah.
So yeah, that's interesting. I mean, it's you will your cost of finance is going to be smaller because you don't have the gigantic sometimes the gigantic interest fees and the closing fees in order to get the debt. So would you require a completion bond in that? Because usually in a structure like that, there's a completion bond necessary to guarantee the investor the movie will be completed at some moment in time.
Yeah, I mean, definitely. I mean, that's part of the risk mitigation, completion bond, of course, E&O insurance, etc. So the things that, you know, can show that they feel safe with this investment vehicle.
So and then you're also saying, or you're thinking, in the chain of in the waterfall, in the beginning of the waterfall, there is the consumer, then there's the distributor, then there's the sales agent. So how do you want to take a bit more from that, because also that consumes a lot of interest and, I mean, fees, let's say.
Exactly.
How we can get rid of those or mitigate those.
And that's again another thing we have designed inside this. So those fees, of course, those fees are pretty large, and you can understand why they are there from that point of view, because they're taking on a lot of risk. So if you flip that and design a service-based contract and say we will pay you upfront, but you take no percentage-based fees. A few things happen there. One, the sales agents, distributors, they get money right up front and they know an exact amount. For an investor, that's also nice because they now there's a fixed amount up front, and then you're eliminating any kind of speculative extraction, right, in the revenue on the waterfall. So if you take away the distribution fees, the percentage based, and as well as the sales agent fees, and you pay them up front as a service-based fee, you can obviously the investor has to front that, but now there's a fixed amount, and then that is now eliminated from the waterfall. And of course, in that scenario, if you have a film that does very well, that's a lot more money, that revenue that flows through, because the agent, the distributor, et cetera, are not taking their percentage off the back end. And there are distributors who will just do that service-based fee. There's also sort of hybrid, like you can do service-based up front, but then minimize that 30% down to 10%. So it depends on territories as well.
So, and why would a distributor, let's say a service distributor, not a major or a classic distributor, why would a service distributor, which you can basically hire to book theaters and maybe organize VOD deals, whatever, if it's a big hit, why would, so they're not gonna get any more money then, or what's going
Yeah,
on?
exactly. But you know, the one thing is
They're gonna have more work for theatrical, at least, right?
Yeah. So the thing is that, you know, you're looking at, like in our slate, where we have 6 films by on average 5 million, 30 million slate. Mm-hmm. So, you know, that small indie film. If you're looking at something much bigger, then you're thinking like, oh, especially from a distributor's point of view, like I can see how this could do really, really well. I don't want to take that deal. But, you know, so many indie films go through the pipeline and none of them ever do that well. And a distributor may not see much recoupment. I mean, of course they're going to recoup because they're taking their percentage until it finally goes down the waterfall. But they may not see a big sum. So they still, you know, they're still taking a chance and a risk. But this way, at least, especially if you have 6 films and you can say, hey, we're going to pay you €500,000 per film across 6 films. Well, now that's a nice chunk of money, you know? Yeah. And so that's the trade-off. And so, you know, their business model isn't just one film a year. They're looking at, right, dozens of films. So to have one film that then gives, that they have a service-based fee on, right, it doesn't feel like, okay, we're not going to miss out. And like I said, there's you know, some companies, there's some new companies even in the US that just only do service-based fees, because it's, in essence, you're just, you know, you're operating a company, and as long as you have that cash flow coming through, that's all that matters. So it really depends on, you know, not every company will do this, not every distributor will do this. So you have to, if you're sort of taking this model, replicating it, then, you know, there's a lot more work to be done up front. You have to negotiate these deals early on, and, you know, it's best to have also relationships. I mean, we have distributors that we work with and know very well, so we can, you know, have those kinds of conversations and set those kinds of deals up early. Whereas maybe a newer indie producer may not be able to do that. So I'm not saying this is, you know, what I'm talking about is something we're doing specifically, but it's not something that can be easily replicated by everyone.
I can understand there's appetite for it because the market's changing. Everyone is complaining movie theaters are empty. So distributors, theatrical distributors, they are willing to do deals of obviously, and also the movie theater. So I think that the timing is really good. I mean, you see it everywhere, that there's some initiatives to fill up the movie theaters again, which is cool, you know. I mean, so basically, in order to draw audience, you need also talent. So what's the pre-sales aspect in your model?
Yeah, so that's another thing we've decided on. We use agents to determine the value, but we are not using pre-sales because
sales agents.
Yeah, to help us determine, obviously, value. Right. But we decided to not use pre-sales as well, again, to eliminate the debt.
No, I understand.
Yeah, so we don't. So all territories are held. So we have obviously the opportunity to make more money on the back end. And again, pre-sales are a great opportunity to help get your film made and financed. I'm not against these things, and we're not against them. But the whole idea is how do we set up a model that is enticing to a very specific type of investor we're looking at.
Yes.
So that is why we go ahead.
Yeah, and so but it's pre-sales driven in that sense that you need some sales estimates which are bankable. Exactly. Otherwise, we're back in fantasy land, you know.
Exactly. Yeah. We're not just risking and just saying, let's hope it works. I mean, we want to understand the value, knowing the value of the project and who's attached and things like that, to understand that, okay, this is working and we know how we have an idea at least, right, of how. I mean, pre-sales are always speculative anyway, unless you're obviously actually signing deals. But, you know, we have an idea of how, you know, films will do in certain markets depending on the cast, etc.
And what budgets are you aiming for? But because what I see is, I mean, pre-sales, it's a tough call unless you have, you know, Jason Statham. And then everyone buys. All the distributors buy it. It's amazing. So taking, you know, spending like 20, 25, 30, 40, 50 million, that's low risk nowadays. If you do a feature film of 5, 6 million, it's going to be very tough to do pre-sales.
Yeah,
I mean,
exactly.
it's possible on that level. It's possible, but it's not guaranteed you're gonna have a breakout hit. So having some financial intelligence behind it, that would definitely help to make that you know to make that budget range interesting. I believe so. I think it's a good initiative towards. So what's the response of, because you're speaking with VCs, with private equity firms, with all those guys. So I'm also dealing with them because I'm also in the software and stuff. So that's what they usually do. I mean, it depends. If it's a VC, they just bet on let's say 10, 20, 30 startups, and then one blows up and then the other just lose. I mean, that's not the case with film, not so extreme, but also the multiplier, for a film to do a 10x, a 20x, a 30x, that's also, it's not Blair Witch every year, right?
No, exactly.
So what's their response and how you approach them?
Yeah, I mean, the response has been great. Now that we simplified,
yes,
it's like we said, we started with the classic traditional approach, and then we kept just scraping away depending on responses. So we got to the point we got because of the responses. So now we are in that stage of, I can't say too much, but we are in that stage where the responses are incredibly positive. Because they understand they understand the structure, and they understand the returns, and they understand the risk. And so that simplified model is something that they're very comfortable with because it's something they've seen. And one of the things that, especially when you're talking to investors, the more you have to educate them, the less likely they are to invest. No one's showing up to have to learn a new market, unless of course there are investors like, oh, I want to learn about film financing. That's something I want to get into. And that's what we didn't want. We don't want to approach that. And that's not what we're, so it's like the whole goal is to approach investors from the point of view that they are used to, and how do we structure this around them. So now the responses have been incredibly positive.
By the way, you can also ask me questions. Huh?
Yeah.
No, usually I try to reason like the AI. I want to reason and see like, okay, maybe there's something extra we can get out of this, and that also in podcasts, I think it's interesting. So and I mean that's up to my alley. So I really like. I really have some experience in film finance, so I really love to see. And I'm dealing with a lot of financiers outside of the movie business as well. So I think it's really interesting now. It's true, if they don't know it, we're making money anyway, right? That's what they say. So why would we venture into the movie business? And then I also showed these opportunities. So it's I think it's up to us to tell a story that, the way it is, because it's finance, things can go wrong as well. But I think it's up to us as producers to be very transparent and explain, let's say in a podcast like this one, and on LinkedIn and everywhere, like, okay, this is how it works. This is how we make money. This makes sense, financially sense, because, not any movie makes financially sense. Yeah. Correct. So how do you select your movies? What are you looking for?
Well, we already have the first slate filled up, so we already selected the first slate, and with the budget ranges we're looking at, they're all genre films, any from horror, and it's a mix, right? Any good slate should be a mix of film. You shouldn't have 6 horror films or 6 whatever. You need a nice mix. So they're all genre films, all quite self-contained. There's the lowest end overall. The slate is €30 million. And the lowest budget there is 3.5, and on the biggest film it's 6.8. And then they are all designed for international market, right? So they're all English language, even though it's a Swedish company, they'll be produced anywhere in the EU for obviously to tap into the best rebates we can get our hands on, as well as, and then of course the films are designed international, so they're all English language. The goal is obviously to have the widest appeal.
So basically you will have to work with some established sales companies in order to get those bankable sales estimates.
Exactly. Yeah, and we do. We have the team that's there. They come from the whole spectrum, from line producers to sales agents to everything. So the team that is behind this slate is well established. All veterans in the industry. So in some capacity, from production all the way to distribution and sales.
So how far are you with the fund? It's like structured as a fund, I guess. Otherwise, it's hard to.
Yeah, I mean it's an SPV, right? So it's a ring fenced SPV, and so it's structured as that. A fund is a bit different. You can't. I mean, you
No, it's with a GP and all that.
Yeah, exactly. So it's structured as its own SPV.
Yeah.
And so that's what so that's what you're investing in, that.
Yeah. What else are you working on?
So on my own, I'm still a freelance producer. I'm working on a small indie film in the U.S., a $5 million kind of thriller. We have cast the lead in that. We're figuring out the rest of the cast. It's a great company called Choice Films that in the U.S. in New York, and they have because they do so much spend in New York, they get a 50% rebate, which is fantastic.
Yeah, it's huge there.
Yeah, and then also I work with I kind of advise with a new distribution company starting up. So it's 3 industry veterans that came together, and they have a bespoke model of distribution plus
in the US
marketing. Yeah, US, exactly. So they only focus on the North American territory at the moment.
I know who they are, but I'm not going to tell you.
Yeah, so I also work with them as well, and which is it's fun because they are 100% that service-based model. They tell you you meet with them, they kind of bring the filmmaker as a sort of a seat at the table. They work with you to design. Okay, how much do you think you want to raise for P&A? So everything is all up front. So that way there's no sort of tricky financing or tricky accounting and things like that, right? No. So you know exactly what it is. There's one fee up front for the team you hire. It's also a bespoke model. So the overhead are the 3 partners, but they don't hire a staff of 20 people. They bring on people individually for film. So it's like if somebody knows horror very well or knows comedy very well, they bring on the right people to design behind it, and then exactly, you can take that number in essence.
Yeah, but
right to the investor.
Yeah, in the it's not self-distribution, but in the service distribution scenario, I think you will also have to commit some marketing money. I mean, it's P&A, print and advertising. So the advertising, well, how is that budgeted? Because I think it's going to be a huge amount, because sometimes P&A is just larger than the movie itself.
Yeah, 100%. So for the first slate, we're working with the distributors. They take their fee for the P&A. On the back end, right? So we're not raising that up front. For the second slate, that's the goal. For this distribution company in the U.S., they very much are, they tell you exactly what the P&A is, depending on how many screens they think you should open in, how you should do that spend, if you want to do media spend, you want to do other kind of spend. So they design that very specifically so you know what that exact amount is. And they do it also sort of in a slow start way. Like if you look at a great example, the reason I'm using this example because everyone can know that, can look it up easily, but Everything Everywhere All at Once, that A24 movie, it started in 100 cinemas in 24 cities, and then of course it went wide. So they help you design your P&A depending on how you want to have that release schedule. So and then you obviously have to raise that up front.
So basically, they have a good feeling about the moviegoer. The people going to the movie theater. I think that's really important, because that's what we tend to forget. We always say like, okay, distribution, go ahead, and then goes to Netflix, whatever. Yeah. But I think it's good to have this. So that means also you have to make theatrical movies. I mean, there's a difference between like straight to DVD, as we used to call it, and also theatrical movie. I think it starts with the script, of course. That's one thing, but then also the level of cast will also dictate a little bit. Like, okay, both 50-50. If the script is really like VOD, whatever, then it doesn't make any sense to put it in a movie theater, I think. It would be very risky, but I think you need some theatrical concepts as well. So basically, you have some development people, vetting those projects, vetting those scripts, I guess.
Yeah, exactly. And you look at them and you compare it, because especially when you can have those conversations up front with distributors, they can tell you, looking at comps and what it'll look like in theatrical, and then how that theatrical should play out to downstream. The nice thing about theatrical, even if you are very strategic about it and you only do 100 screens, 200 screens, it has a great multiplier effect even on downstream. So you may not see a large amount from theatrical, but because it did theatrical, then you can see a bigger increase in downstream.
International will pay more, that's for sure.
So if you can play it right and not lose the money, and if you have a good strategy, and this is a lot of these conversations have to be happening up front. And that's what I tell producers a lot. You're thinking about distribution at the end, but all these strategies should be talked about in development. And because if you have the right theatrical strategy, it can multiply 2x your downstream revenue, because the two things happen when you do theatrical, even a small way. It brings this sort of clout to the project. People are like, oh yeah, I saw that it played in another city. I couldn't go to it because it wasn't here, but actually I want to rent that movie, or I want to watch that movie. Yeah, so it brings that. Or people see that it's like, oh yeah, I saw a poster for that movie. I didn't see it in the cinemas, but actually I want to check it out. And so it works so it really can help amplify the downstream revenue or downstream performance, because it did some level of theatrical. Even if that theatrical wasn't large, it has a nice multiplier effect to it.
Yeah, so basically before you start shooting, you start your social media campaign, I guess. Advertising is very expensive.
Yeah, media buy is incredibly expensive. So it depends. Yeah, obviously, I'm a huge proponent of anyone using their social media, even down from the director, the producer. Even if you're not even hiring a social media company that's marketing the film itself, I think the higher level creatives should be using social media to their advantage. Because it's free marketing. And if you can just be showing up and talking about your film and doing that day in and day out, especially as a director or producer, for 8 months straight, by the time that movie comes out, you have built an enormous amount of awareness to very specific people, which is your audience. So it has a huge benefit to it, and it costs you nothing besides time.
Yeah, we have to put this in the contracts with the cast and with the talent, let's say. Otherwise they just do whatever they want. It's fine to do whatever you want, but it's a commitment. It's like a startup, right? A movie is a startup, so that's what I compare it to all the time. And you even have to set up the company, the SPV and all that, so it's a gigantic work. The social media component, I think it's paramount. It's basically bring it, give it birth to social media, and then continuously post and stories and all that, and then eventually the movie will come out, and then you draw audience to the movie theater. I think that's a good business model. But if you do 5 movies, you will need like a lot of people to get that all streamlined, I guess, right?
Yeah.
So
exactly, 100%. Yeah. But it's 5 movies. They're happening concurrently over the course of 6 years. Not all 5 movies are being filmed and released at the same time. So in essence, when film 1 is in production, film 2 is in pre-production, so they're going to be, so they
back to back, but you can still go on holiday.
Yeah, exactly. So they're not consecutive, like 1 film and then 2 films, 3 films, but so they're concurrently, but they're not all together, packed. So that helps a lot.
In Sweden, what's going on in Sweden? Is there still something going on there on the film end, or?
Yeah, there's, most Swedish films that are produced, or at least that get recognized, they're industry, they're award films, right? So they're designed for that type of market. They're designed for the film festival market for the most part. And then there'll be outliers, and they do well, and remakes come along. But for a lot of the films that hit internationally, they usually are sort of, we'll call them, award film festival types of films. Sentimental Value is one that was co-produced within a Swedish production company, but Prior to that, there was, what was it called? It just slipped my mind. It'll come to me at some point. Triangle of Sadness, which did quite well, but a lot of those films, a lot of the Swedish films are designed for Cannes, for the market, for the festival circuit, and then some of them will be outliers and travel even more broadly.
Yeah, I think it's the same in every European country. In Belgium, it's the same thing. In France, it's the same thing. In the Netherlands, it's the same thing. Germany. And then the question is when they ask sales agents, so what's playing in the festival? Oh, we don't know. We're just selling movies. They don't know what's playing in the festival. So that tells a lot how financially attractive it is. It's another business model. I mean, it's not a business model. It's just another model. Let's say. I was never involved in movies. All due respect for those movies, but they're really very deep, very sensitive, and all that. Everything is in there, but I think a movie is too expensive just to make for a festival, or just like your own audience, the people you deal with. I think a broad audience is what you need. In order to get 5, 10, 15 million on a bank account and in order to make a movie. So that makes it a business, right?
Yeah, exactly.
And I also don't think that the size of the budget matters. It just has to make financially sense. That's why my focus in the movies is still the pre-sales model. But you have to go very high. It's really tough to hit those numbers and to say like, okay, we pre-sold, let's say 10 million, and we still have, in international value, another 10 million, which we can then gap finance. We can just sell or get financed by an external investor. So that's the ideal model, but it's tough because then you run into, you need this cast, so you need to be capable of attaching this Jason Statham. Let's call him Jason Statham. So that's the catch-22, of course. But if there's investment, it's interesting because then you also can cash flow those. You can get over the catch-22, of course. That's interesting stuff, man. So you're not involved in Swedish films then?
No, I haven't worked on a Swedish film in a few years. I mean, I was a production manager and I had worked on Swedish films, and so that was my job. And I actually worked at a film financing company, a film fund in the US. So I was around that. But I worked in it's called Film Invest, and they finance. I think their annual budget is around 10 million euro a year, so they're co-financier, and so that. But I haven't worked on those things in a while. I mean, now I've been either freelance producer. I'm very specific on a type of project because it takes so much time and energy. So I'm just working on one actual film as a producer, and then working with the capital side of one company, and I do a little bit of help with the distribution company in the US as well, and it keeps me pretty damn busy.
I can imagine. For me, I'm not like into the let's say we need like 3 movies a year. I don't care anymore. It's like it needs to be really good, so I focus really on the script. And what I founded is screenrep.com, which is, I send you the invite as well, which is a platform where you can, as a screenwriter, you can just upload your script on an intake link, which is provided by a producer. So the producer doesn't have to, share his email anymore, or he just doesn't have to, be exposed to all the emails with all the from all the writers and then respond to that, because that's a big problem. You get like a dozen of scripts or a couple of hundreds of scripts, and then they all start following up, so your inbox is exploding. So that's not really desirable. So we fixed that problem, basically. And the thing is that the way you can select the project goes very quick now,
exactly.
which is an advantage, because what you want as a producer, I don't know about yourself, but what you want as a producer, you want to have the best script on your desk in in a second, right? But for me, it used to take years to get this right script. So you have to read a lot. You have to. I mean, right now you just throw it in ChatGPT and gives you an assessment. But that's not enough, man. That's not enough because it's always like, yeah, it's good. It's this, but okay, will I do it or will I will not do it? So we create those models to filter out and just really give you a good match. I think it's going to be huge because there's more going to be added. But the AI coverage is gigantic. It's several layers, you know. It's really a very complex IT system, but it works really well. And it gives the you will know where you stand when you read that report. So that's we're going into that really deep right now. On the other hand, on the production side, again. It starts with a script, so the scripts flow in right now. A lot of scripts. We also develop a lot internally, but my focus is on really big movies that are really commercial and that has all those layers, you know, values, good values. It's also very important. But like a good genre film, a good action movie, even horror movies. But you know, with substance, I think it's really important. I mean, look at the success of A24. You know, it's just they're not just making movies, right? They're making A24 movies. It's already like a brand, you know.
Yeah, exactly.
So I think that's really interesting, and nowadays it's not like before, maybe 5 to 10 years ago. It was a lot of co-productions, and they came in and they have this money from the, you know, the grants, you know, from Ireland, from the UK, from whatever, you know, from Holland. I'm not into that anymore for now. It's more like, you know, it's better to have like this gem and then work on that. And if it takes 2 years, I don't care, you know, it's just fine. But on the business side, I think there's a lot to do, and also on the finance side, which you're doing right now. I mean, we also are into film funding. I funded a couple of movies, and it's those were more based on the talent attached, and also the business model, of course, needs to make sense. It has to make sense. So I think it's really smart from your side to get the system and spread the word. So I'm happy to help you with that. Because it's the financial industry. They just focus on real estate. And then also on real estate, and then the other assets class is also real estate. So just focus on real estate.
I mean, that was sort of the perspective we're thinking. Like, okay, how do you structure a film fund or a slate like real estate? Yeah. That was, you know, it was like, because the whole idea was like, how do we come, instead of bringing them to our level, how do we design something that obviously works? It has to make sense. It's not just the phrasing of it, but how do we design something that is at a level that they understand? Because I feel, and that's something that it kind of was coming to me, that I started noticing. It's like, we always, you know, so many producers are trying to like, how can I convince this investor to come to me? It's like, what can you do? How can you structure it to be at their level, to be at what they understand? Because yeah, and obviously it has to make sense. It has to actually work, right? I mean, you need to do your due diligence and have legal involved in all those things. You know, you can't just structure this and, you know, and then just throw it out there. But so it's really been about, okay, what's the real estate package of a film slate? In essence.
Yeah. I think also building library is important. If you want to compare it, you have recurring income with real estate. If you let's say you build and then you rent, so then you have recurring revenue, which is usually like around 4% in real estate. Of course, you can get much more in movies, but it's another curve. You know, it's a lot in the beginning, and then it can take for 20 years, but it's gonna be a little. Now, when the revenue is just going down, you know, you have another movie. So the revenue
exactly.
So the tail will stack up, and that will give you also very interesting revenue, which is really interesting for investors as well. And then when the library is, if you did it for 20 years, you can sell the library.
Yeah, exactly. And then on top of that, I mean, well, the goal is that what we're already structuring it is that after, you know, within 3 years of the first slate, I mean, in production, we are already raising capital for slate number 2, which would be a bit bigger, and then it's not unlikely for a handful of those same investors to say, okay, let's just instead of I want that revenue flowing back to me, let's flow it back into that second slate. And so we want to stack these slates over the course, like we're talking about decades here. So we're not just looking at a one-off slate. We're looking at an investment vehicle that keeps growing. So, multiple SPVs, and then you have these large, not only are you building the library, the revenue stream starts multiplying, et cetera. So, and that's the thing. That was a big part of it too, is that, we don't want to just look at this as, one slate, and then we accomplish it and we're done. And then we say, okay, well, let's mail this worked, 6 years later, let's try to do it again. It's that let's build this like that up front.
Yeah. So basically, you will need an inflow of productions, of scripts, screenplays. How are you going to manage that without Screen Rep?
Exactly. No. Screen Rep's the right tool. I mean, it's a great tool. It's fantastic. I think some of the two things you already talked about, but one other thing is that the fact that you can easily filter the projects, but having something and also not be bombarded with emails and all that, it's very easy to have a singular place to track everything, but also that key right there is a single place that's sort of off platform, off of your email, off of your hard drive, off of whatever, and you have a single place where everything lives. It makes it so much nicer. Because the easy thing is that, a producer brings on an assistant or another, or an associate producer, whatever. It's just, in essence, you're just handing off the keys to the access. It's just, everything's there. It's so much more simplified, especially if you're looking at, because I try to look at things, in long term. So in the short term, it's great. But in the long term, if you think, a production company using this for 10 years, and they've got hundreds and hundreds of scripts or even 1,000 in there, it's very easy for a new producer to come in and see how the access to it and work with it instantly. So that's a huge benefit.
Yeah, it's basically made so you can just sit at the beach on your iPad and make very profound decisions.
Yeah.
Because right now what you have to do, everyone says, I have my system. What they do is actually the script comes in, so their mailbox is inundated with scripts. That's one problem we solved already. They download the script, they throw it in ChatGPT, Anthropic, whatever.
Yeah.
Then there's like something coming out. Is it consistent? Throw it in twice. You're gonna have another.
Exactly.
You're gonna have another output. So what is it? Word? Maybe it's better just to read the script, right? So that problem is also solved because you sit at the beach with your iPad and you see this pitch, this log line, this pitch, and then you want to read the script, you just push a button, you read the script, or maybe without downloading the script, you can just do coverage. You do coverage. That's going to be rolled out in a couple of weeks. You do AI coverage, but not the ChatGPT coverage, like really serious coverage, very consistent. And so you just push a button. That's it. So you don't have to drag it into another. You don't have to download and then put it into ChatGPT. You don't have to do it. Just click and then you have it. And then all that information, you make your notes also beside it. That stays into the project. So every project has its workspace. Basically, everything stays in there, and that's just convenient because once you feel like, okay, this script is really great, it's worth pursuing, you just click and you email the writer and you start a conversation. You do video calls and you start pre-production and do all those things, right? That's just, then it's not screen rep anymore. Then it's production. But what we do is really streamline this intake from writers, and there's more coming as well because there's so much we can do, and it's on the list. IT is like sweating right now to get all those things done, but we do little by little, and I think you have to think about, what I do as a producer, I have a lot of frustration getting all those scripts or analyze those scripts, so let's fix it with screen rep, and then I know when my problem is going to be solved, Tyler's problem is also going to be solved, and any producer using the platform is going to be solved.
Exactly.
So that's really you want to take away the pain in the process, and that's just what we do. So tell me more about what else you're doing. So you're really present online, of course, on LinkedIn. Is there some things you're focusing on as well?
I haven't done it for a while. I'm trying to get back into it. I've been so busy. But I mean, like I talked about before in terms of marketing, and it's just, I mean, I thought of LinkedIn as that. It's like, okay, in essence, how do I market myself? And then and one of the things I kind of come across is that I figured out that, which is not like a new idea, but I just looked at like teaching as stealth marketing. So, or educating stealth marketing. So I thought like, okay, instead of writing about me and this is what I know, what kind of information can I share? And then in that, I am in essence am marketing myself. So how it mainly came about was when I started having more conversations with financiers and capital funds, and then I would write about what I just learned. It's like I just had a meeting, and so I would take 10 different things from that meeting, and then I'd make 10 different posts, and this is what I learned, talking to a capital fund. This is what they like to see. This is what they don't like to see. This is how they operate. This is how they capital stack, things like that. And what was really great about that is by doing that process, one, of course, I gained followers and all those things, which is fantastic. But I would oftentimes I would get another investor would just DM me, or a capital fund would DM me and just say, oh, hey, I came across your post, and like we actually also invest in films, or we're interested in this. And so then I'd set up another meeting and have another call. So my network of capital investors grew exponentially only by just talking about what I was learning and sharing that. Had I written, which I've seen so many times, and producers are like, oh, we're looking for an investor for our film. Are there any investors out there? Well, no investor is like, yeah, I'm an investor. Let me reach out to you. No. But if you're a producer and you're like, well, we have this kind of budget, and this is how we're putting together our package. It's designed this way. If you kind of just talk about that process, it's very likely then someone will reach out to you without even asking. A lot of times you get those, you get people reaching out to you because you're not asking for them. But once you start asking, like, hey, can any producers email me, or anybody interested in my screenplay? Can any director reach out to me? You're going to hear crickets. But yeah, when you start sharing in a really interesting way, and like I said, I find teaching to be the best way to market something. Like you learn something, like screen rep, like you just talk about a problem and how it's being solved, and there you go, you've marketed that, marketed yourself or the company. So I've always been telling people to use LinkedIn or any kind of social media. If you use Instagram or YouTube, whatever, it's best for creatives. But if you are on the business side of filmmaking, a producer, etc., then I would, I use LinkedIn a lot. And this is how so much of what I'm working on had come from, the people through LinkedIn.
You can have a serious discussion on LinkedIn, which is good. And indeed, it's bringing value. That I think that's most important. Bringing value and speak with people like yourself. I think it's really interesting to have you on right now, and just to brainstorm and see what comes out of it. So it's always good to talk, and I think it's really interesting period we're in right now. The digital revolution or the AI revolution is gigantic. So there are many opportunities. Budgets will go down as well, I think. There's a lot you can do more production value, bring more production value to the project for less money, which is good. Of course, there's all the tax credits, but crew rates are also not so low anymore. Even in the Eastern Europe. So it's you have to create the right mix. That's what I'm doing a lot, structuring which country, and then for the bigger ones, UK always wins. Because they're above the line also qualifies. That's something I think we're missing in Belgium as well. Also in the in the Netherlands or France, but they just they solve that with extra grants, which is then based on selection of movies, but that's not like an economic. They call themselves economic funding, but it's not. It's cultural funding. So that's why I think the UK is really popular still. Because it's pretty straightforward, you have your SPV, you have your OK from HMRC, and you start spending. You need all the legal stuff needs to be in order, but that allows you to get those big stars over there, and you see what's happening. Whole Hollywood is there. So I'm not sure how that's going to evolve in the US, because in the US they're also complaining, especially in California, the tax rebate should be higher. But the crew rates also, the inflation of last month, it was 4%, right? So it's I mean, Belgium, so I don't know in other countries, but of course with the oil crisis and all that, so everything becomes more expensive, and that's also the reason many movies are not made anymore. So I think we should rethink a little bit the process as well on making movies, on how to do that, and maybe after all, I don't know. I mean, you take the tax credits if you can, but maybe for some movies it may not be worth doing. For smaller movies, maybe you can just shoot it where it's cheap, and you just do it without any tax credits. That could also make sense. I mean, that's not my business model, but I see people doing that, and they can also succeed. They can also become the next Blair Witch. So we have there are two scenarios basically. You want to be the next Blair Witch with a low budget, or you want to be the next Jason Statham, right?
Exactly. Yeah. And it's I mean, it all depends on your goal. I mean, some it's like they just want you want to get your movie made, and that's what matters. And then you just focus on one movie at a time, get it made. The economics aren't the biggest thing. You're not really worried about how much money it's going to return. I mean, obviously that's not really a great pitch for an investor, but depending, maybe you're just doing the best you can to cobble together all the money. You don't even have to worry about private equity, and it's just like the goal is just to get the movie made. And of course, you take your salary, or you take your fee and whatnot, and you can just you try to make another one. And so really, it depends on the goal of what you're trying to do and where you're trying to make it, and
because. When I think about the financing structure we spoke about a little earlier, I think it's interesting indeed to have this equity fund and finance the entire movie, because what you see a lot with film financiers is that they so there's the pre-sales they finance, so you will be paying like around 10%, maybe a little bit less, sometimes more, just for the debt. And then they have the gap, which you will be paying like 15, 16, 17, 18, 22%, whatever. And then they just merge it into one loan facility, and they charge you like 18% for everything, right? That happens everywhere, right? So that's a lot of money you're spending. Your cost of finance is gigantic. The executive producer fees on top of that, the closing fees, 2%, whatever. That's going to be all added. So in your model, you're going to get rid of all that, and that goes straight to your investors, right?
Yeah, exactly. Yeah. That's exactly how it's designed. It's to eliminate as much of that as possible. It's just how do we clean, and really was just looking at, because the number one when we were looking at sort of those traditional models, the number one sort of, I guess, a complaint was that the waterfall, it just doesn't make any sense, at all from their point of view, especially if the goal is to when you're trying to bring in an investor on that individual level, right? So there's plenty of investment funds that invest in films, but they're investing in 20, 30, they invest in films the same way a fund would invest in 30 startups. They're investing in 20, 30 films a year because they're looking for that 1-2 hit. So that risk is of course diluted. But if you're looking at an individual investor level, this doesn't make any sense. But if you are, obviously if you're a film fund or any kind of, financer like that, and you're investing in, again, 20, 30 films a year, you're okay with those models because it all in essence even out. But on an individual film level, it doesn't make sense. On a kind of a slate, just an individual slate level, it just didn't make sense in the waterfall. So the goal was, okay, how do we clean that up as best as possible? And still obviously it has to make economic sense. It's not just on paper, this looks good. You have to obviously, we have to test it all and do our due diligence and ensure, and work with legal and accounting, et cetera, to make sure it all is going to line up the way it should. But it was to clean up all of those issues, right, that you just mentioned.
Yeah. Solving problems. That's
exactly.
What we do. Yeah, but it makes sense. It makes a lot of sense. So you're exclusively focusing on theatrical movies, or also?
Exactly. This slate is only for theatrical. I was working with another film fund that their focus was only on streaming services. So the way the model sort of worked was that a giant chunk of the investment would come from private and then you would already have to have a distribution set up through a streaming platform. So you would have to work. So you'd be working with a preferred production company that already has those relationships with distributors, and so that was an interesting model. So, I think when we do our second slate, we would see. But right now for this one, it's just purely start with theatrical for all 6.
Yeah, because there are a lot of producers also trying to do the self-distribution, which is, it could work for a movie of a couple of 100,000, but for a big one, I don't see that. I mean, you also have Angel Studios in the US, right? That's also a model I think is interesting. But it's US, it's very US oriented, that's for sure. And, that's basically a model which is directly connected with the audience, basically. And that's what
exactly.
they want. Yeah.
And I mean, what makes sense with their model too is, they know their audience 100%. Like they are designed for their audience in mind. And so that helps a lot, as opposed to maybe some kind of other fund or distributor. It's like, well, we're going to try to figure out our audience for this film. It's like we are finding films for that audience. So when they're scouting films and whatever their process is, it's like we want films that is going to match this very specific audience.
Yeah, that's already a niche which is substantial over there. Now, from the European side, you have to be international in order to break through and to make revenue, because basically sales estimates, that's not 2 countries, it's the entire world you monetize on. So that's clear. So you're dealing mostly with VCs or private equity funds or just wealthy individuals. What's the balance?
Yeah, high net worth, family office, and VCs. So those are our core area.
What's the worst response you ever had?
Well, before the response, all the responses were pretty much the same. That it felt too complicated, too messy, and then obviously the waterfall just doesn't line up. When you're looking, especially if you're looking at a slate and you're just multiplying that same issue by on a much bigger level. So that was, those are the biggest complaints. And now we're getting, not that even when you have positivity doesn't mean they're going to invest, but at least it's not that, okay, this is too messy or this is too complicated or this is too, so we're not interested, or I don't understand the process, so this is just, eliminated. And, and other thing too is that we don't really talk about the films, right? Because the films are the vessel that delivers delivers the financial product. But we're just pitching a financial vehicle. We're just pitching the asset. So we don't really dive into all that material. That of course the decks for each individual film and all that stuff. All that is in the annex documents, right? It's all in the data. But on the pitch itself, we don't really. The films aren't really a part of the conversation so much, like the individual films, because it's more of they want to talk about the actual financial vehicle, which is the SPV overall. So, and then I think that's what's interesting. Especially I think that's something for indie producers to keep in mind. Especially when you're talking to new investors and things like that, it's so often the pitch is like how great this project is and how great the story is and all these things. And those things, there's nothing wrong with those things. But the first thing you need to talk about is you need to talk about the money and how that's going to work and how the capital is structured and how they're going to earn revenue, et cetera, et cetera. And then you can talk about the story and all those things. But especially if you're talking to new investors who don't really know anything about film, they're not going to, they want to understand how this model works to begin with.
So you're still raising right now?
Yeah.
How much do you need? Or how much more do you need?
We are raising a total of 33.
Okay.
So we have two classes. We have Class A and Class B, and they have different preferred returns because the minimum ticket size for Class A is different from the minimum ticket size for Class B.
The early adopters get rewarded.
In essence, in a way, yeah.
Cool. So where can people find you?
You can just find me on LinkedIn. It's probably the easiest way for anyone to just track me. That's where I try to stay most active.
Sure. And investors, where can they find you? They go on LinkedIn, they send you a DM, or
LinkedIn is the easiest way.
That's the place.
It's the fastest way. Yeah.
For me too, and for scripts, it's Screen Rep.
Yeah, exactly. Screen Rep. Yeah.
Okay. Anything else, man?
ScreenRep.com, right? No, ScreenRep. Is it?
.com, yeah, .com,
yes.
of course. There's nothing else than .com, right?
No. Well, I don't know. There's always the .io and the dot.
No. No, that's the thing. We could do .io, which is more like IT, or .ai. We could do that as well. But we haven't. I think we bought the domain name as well, but we're not using it because you know what? We're not an AI company. Yeah. There is AI we use as a technology to help the producers and the writers, but we're not an AI company. So what we're not trying to do and will never do is like we take your script and we make something better out of it. We're not interested in that because I think art comes from above or comes out of the creativity of people. And in order that to surface, we built this system. I think AI is really good in analytics and to figure out why this script works, what doesn't work, and what could be improved. So we can show all that information like in a second, right? And that's what we do. But AI, in order to make movies with AI, that's another thing, you know. We're not into that, and we want to keep it that way. I think it's really important to solve this problem, get rid of this pain we have every day as a producer and as a writer, because writers, their problem, it's gigantic. They work on a script for 2 years, they send it out, they don't get any response. Right now, at least, they're gonna see if the producer downloaded the script. They can see if the producers put it in his watch list. They can see if the producers put it in my slate, it's called, in this slate. And then also if he just deletes it, if he says, okay, we're not interested in this story, then, you know, it will be archived and then the script is gone on the producer side. It doesn't have the script anymore. It's not in his inbox. No, it's gone. And the writer is notified from every step. So that's, you know, I think that's something we owe to the writers, because there's so many emails I never respond to. So that's
exactly. Yeah, I mean, it's hard. I do that too. It's just haven't responded. You wish you could respond to everything, but you can't. And it's hard.
No. And still we need scripts.
Yeah, exactly.
We need them. So yeah, it's a little bit mixed feelings we have, right?
Yeah, exactly.
So anything for a closer, Tyler?
No, I don't think so. I mean, there's a lot of money, a lot of opportunity, and a lot of, you know, ability to make films. It's just, you know, it's not easy, but you just got to get out there and keep doing it.
Yeah, I think I like to finish with this future is bright. I think it's really bright with AI, with technology. Also, what you are doing, the financial modeling you use in order to say like, okay, this model is broken, we fix it this way. I think makes a lot of sense. It's great, man.
Yeah.
All right, and that's a cut, right?
That's a cut. Yeah, exactly. I will.